Now, the U.S. companies tend to start reporting a little bit earlier. So it really is, it's more weighted at the beginning of the earnings season to U.S. names, but Canadian names start to really pick up as the season goes along into late April and then May. And this week is actually going to be a really busy week. We have Google, Microsoft, and Meta reporting this week, but that's not going to make it. They haven't reported yet. So Q1 earnings season, we're right in the thick of things. I've highlighted a lot of companies, as I said, about 250 companies. I just highlighted 5 that I thought were interesting. We really look at every single one, of course. But I'm going to start with a Canadian micro to small cap, Ready Shred Capital Corp, KUT, on the venture. Ready Shred Capital is the owner of ProShred, ProScan, and Secure eCycle brands. It reported strong financial results for their fiscal Q4 and full year of 2022. Reported those results on April 21st. Company reported impressive organic growth, particularly in its core shredding service offering. It also completed several acquisitions. Q4 revenue up 48% to 15.4 million. EBITDA per share in the fourth quarter up 70% to 17 cents. For the full year, the company grew its revenue 58% to over $57 million, and EBITDA was up 45% to 84 cents per share. And Ready Shred's plan is to grow the business by way of both franchising and the acquisition and operation of information security businesses that generate stable and recurring cash flow. Next up, we'll look at a U.S. mega cap. This is Proctor & Gamble, PG. It's a $368 billion market cap company. It's a U.S. consumer products giant. They reported positive financial results for their fiscal Q3 2023, and they also raised their full year sales guidance. So Q3 net revenue increased about 4% to $20.1 billion, and organic sales were up 7% for the quarter. Core EPS, earnings per share, was $1.37, up 3%. Fiscal 2023 all-in sales growth guidance was raised, but only to about 1%. So they're only looking at about 1% sales growth this year. Organic growth is still expected to be approximately 6%. So obviously the company is divesting some of its business. Fiscal 2023 diluted earnings per share growth was maintained in the range of flat to 4% growth over 2022, equating to $5.81 in earnings per share expected for the current year. That puts Procter & Gamble's valuation at about 26 times earnings, roughly 26 to 27 times. Next, we'll take a look at another U.S. company, Badger Meter, BMI, on the New York Exchange, trades at $135 per share. It's a $4 billion market cap company. This is a flow measurement company. They reported record Q1 growth. The results came out on April 20th. Q1 sales increased 20% to $159 million. Operating profit increased 33%, and earnings per share were up 35% to 66 cents per share. They also completed an acquisition at the beginning of the year for $18 million, and this extends their offerings in the smart water and pressure monitoring and leak detection businesses. The company's expanding portfolio of end-to-end smart water offerings is really what they attribute a lot of their success in the quarter to, and they're seeing strong demand in that area. Another U.S. giant here, Lockheed Martin. Everybody's talking about defense stocks, so this is somewhat topical. It's a $122 billion market cap company, one of the largest defense contractor in the United States. Also a major player in the space race as well. They reported largely flat Q1 results on April 18th. First quarter net sales was $15.1 billion compared to $15 billion for the same quarter last year. Earnings per share, $6.61 compared to $6.44 last year. There were some notable accomplishments in the quarter. This included securing a contract for the first U.S. sea-based hypersonic missile program, also delivering the first F-16 fighter aircraft out of their new Grenville, South Carolina factory, and third, being selected to provide 88 F-35 fifth generation fighter aircrafts to Canada. The company says they're on track to achieve their full year guidance of 65 to 66 billion in revenue and 26.60 to 26.90 per share in earnings. So this puts them at about a valuation about 18 times expected earnings for the current year. And then finally, we're going to look at a micro cap, small to micro cap up here in Canada. This is Atlas Engineered Products, trades at a price of $1. It's just under $60 million market cap. They're a supplier of trusses and engineered wood products. They reported record financial results for the fourth quarter and full year on April 20th. Full year revenue was up 12.4% to about $62 million. Operating income increased 26% to $12.5 million, and earnings per share climbed 55% to 14 cents per share. The company continues to assess M&A opportunities, acquisitions that fit to their goals and strategies. They're also working on bringing in automation and operational improvements and adding new products. So when we look at these results, they are fantastic. 14 cents per share to $1 share price looks like a cheap valuation. However, we have to caution about extrapolating these results going forward, because the company also mentioned that they expect to enter into a more competitive market in 2023 as higher interest rates impact the housing market. And that does it for our top 5 for the week.
Awesome. Yeah, the first company there, ReadyShred, we've interviewed a couple of times in the past. They're an interesting business. I did note that the EBITDA margins in the quarter that they achieved were down from margins they've achieved in the first 9 months of the year. So it was lower, up year over year in that quarter. Similar on the operating income margin as well, lower in the quarter. They are, I know, dealing with persistent inflationary pressures and supply chain disruptions. They had higher fuel costs, although it does look like fuel costs have come down. We'd have to dig into the numbers a little farther, but it does seem interesting that one of the trends that we've seen with them is they're rolling up some of their franchisees, and that has continued, buying essentially their own franchises or franchisees. But they're buying them, I believe in the last quarter, they bought them about 5.75, 5.5 to 6 times EBITDA. Now, the thing is, they're trading at that price too. So, I'm sure they'd like to have their share price a little higher to be buying at the same price. Then the math works out a little better. But they do probably believe they can bring it into their fold, reduce costs, and juice the EBITDA, juice the cash flow coming out of the company. So it is interesting. Debt has increased at a time when interest rates are higher, so it's something to monitor. But it is trading at relatively, it looks like, reasonable multiples. We'd love debt to be lower and cash to be higher, but you can't have everything perfect in a business. It is one we're monitoring, as well as we've interviewed Atlas as well. Great quarter, great year really for the company. One of the issues we have, it can be very boom and bust in that industry. So you can have a great year, and then it doesn't necessarily have to fall off a cliff, but at some point, if demand wanes, earnings can go significantly in the other direction. So we monitor both of those companies closely, but they're not buys right now for us. We're looking closely.
Well, certainly with Atlas, we'd be concerned about management's indication that it's going to be more competitive in 2023. So that can mean anything. It can mean flat revenue, lower revenue. Certainly you would expect some pressure on margins.
Mm-hmm. Mm-hmm. Yeah. Just going back to ReadyShred as well. And this is, something that we were being cautious about when we interviewed them, is just the overall price of paper. We've seen it basically go, consecutively since Q4 of 2020. We have only seen the price of paper increase until the most recent quarter that they just came out with, Q4 of 2022. Now, it's still is elevated, but this is the first sequential quarter where we've actually seen paper prices slightly come down or kind of go flat rather than continue their upswing. As well, just moving back to Atlas Engineered Products, I did see that the company currently anticipates that increased interest rates will have a minimal overall effect on the housing market, given the number of homes still needed to be built to support Canada's continued growth in immigration. Now, I do know that in one of our past calls, we asked, what could potentially derail you, and that's what they said is, interest rates going above, I believe, that 4% mark. So it is interesting them coming out and actually saying the opposite, where they don't anticipate interest rates to affect the overall housing market. Now, I don't know if that's just, they're trying to be glossy about things to not scare the market, but, they are taking that side of things now, that it shouldn't overall make a slowdown, they are saying.
Yeah, both those companies certainly good years, and rank, probably in the top 10% of all smaller related companies in Canada, without a doubt. Whether they meet our full criteria right now or not, we'll continue to look at them in more depth and see if we can have sustainable earnings. It's great to have earnings in 1 year, but if you don't sustain that growth or maintain that, and you fall off a cliff 1 or 2 years later, it can't sustain a higher share price over the long term. So that's what we're looking for: companies with a little bit more sustainable earnings. Potentially, Ready Shred has that. We'll look at Atlas to see if it can continue to maintain growth over the long term in earnings and cash flow and revenue. So that's what we're looking at from these businesses, see if they can continue that.